Welcome to Transformers, the podcast about how business people and policymakers are creating a sustainable future. I'm your host, Kai Embren. My guests today are Mats Andersson and Sasja Beslik, two influencers when it comes to the role of investment in the perspective of environment, social and governance framework called ESG. Mats Andersson has a degree in economics and has held previous management position at AP4, where he was the CEO. AP4 is a Swedish pension fund. Then also in SG Wolfsburg and Deutsche Bank and AP3 and Skandia Life. Mats also served as a member of the board of Carnegie Fund and Carnio and Global Challenge Foundation. He's an advisor to the French government regarding green bonds, Kenfo, German Federal Fund, and tobacco-free portfolios. Mats has also been awarded as Chief Investment Officer Lifetime Achievements Award for his leadership of AP4 and his contribution to international projects on sustainable investments and climate. He also holds 5th place on the UN 100 most influential list in the category pensions and investments. Sasja Beslik has worked at Nordea Bank for many years as head of sustainable finance. He went to work for the Swiss Safra Bank as a senior executive in sustainable finance and business development until last September, when he joined the largest Danish pension fund, PFA, as head of sustainability. In September 2022, Sasja was appointed to be the Chief Investment Strategy Officer at SDG Impact Japan. In 2020, Sasja Beslik was ranked as the world's most influential person within green finance. He is the author of the book Where the Money Tree Grows, and he is an ESG expert that helps a large audience understand the ins and outs of ESG in this weekly newsletter, ESG on Sunday. He has a BA in economics and journalism. Welcome, Mats and Sasja.
Thank you.
Thank you very much, Guy.
So, over the last few years, climate change has been a concern in the financial institution priorities and using environmental, social, and governance factors. How far advanced they are to transform our society within the planetary boundaries and meet different targets in the Paris Agreement, SDGs, and the ESG emissions. This is not very clear, and how to build trust and minimize risk for greenwash. This is what we will talk about in today's Transformers. But let me start with the question about the latest development, looking into the capital market and climate change. But in the new State of Climate Action report tells us that no high emission sectors are decarbonizing rapidly enough to align with the Paris Agreement 1.5 degrees pathway. So the question is, will the capital market scale up and speed the inflow of capital that make the difference in the world that is needed? Mats?
What is frustrating, we know that the capital is there. We can find the trillions and trillions and trillions. We can also find the commitment that we want to put the capital to work. Unfortunately, it's not happening in a pace that we ought to have. And I think that ain't gonna happen until we put a fair price on carbon emission. Because once you put the fair price on carbon emission, capital will be spent, invested in dealing with ESG in a more proper way because of the reason it makes sense economically. And we need to make capital move on economical basis. Without that, nothing's going to happen. And that is exactly what we've seen in the past 5 years. We know the commitments from the Paris Accord. We know the commitments and alliances that were formed in Glasgow, but nothing really in the real world, to me, has happened, or it hasn't happened fast enough anyway.
I completely agree with what Mats is saying, and I also think what's relevant to stress is the fact that financial industry partly mirrors, reflects the real economy. And the real economy is, in many ways, not really transforming fast enough in order to sort of tackle one of these biggest human civilization challenges that we are facing. So you have this expectation that financial industry somehow, somewhere, will take that sort of a leap of faith and try to really shift capital ahead of real economy, which is something that is not really happening. So I am completely in line with what Mats is saying. And I think also that one of the probably the biggest the question is that the regulation that you have in European Union, regulation that you have discussion about in the US, what will that have? I mean, what will that lead to? I mean, the CO2 price and CO2 emissions is of course the silver bullet to solve many of these things. And I hope that we maybe in the future we'll be able to agree on that, but right now I'm very curious about where the regulations will push financial industry right now.
Is it a possibility to get the capital going into the areas that we need to have investment in, Sasha?
I think it is, but I think also your question is quite broad. Capital investment, I mean, investments of capital in the solutions is there, but it's probably not always there if you compare global north and global south. I mean, the global north is decarbonizing its consumption-based economies, but still the biggest chunk of production-based economies, which are on the global south and global east, are really not where they need to be. I mean, you have restart of coal power plants in Asia. You have, China is leading in many ways, transition in the ways how they invest in solar and wind and so on. But still, I think the amount of capital that we are investing in so-called mainstream economy is still predominating compared to the sort of ESG tilted or climate tilted investments.
Yeah, I agree with Sasha, and if I were to add anything to this, I would say that we need to go from actually commitments and signing different alliances to actually do something in real life. And again, as Sasha said, the silver bullet, I guess, is having a fair price on carbon emissions. And then, of course, I am worried, as everybody else, that we're moving too slow. And what I think would be needed on a global basis and regional basis is a roadmap on how do we get to 2050, and how do we become carbon emission neutral or carbon emission plus. Because I don't see that in real life. And as you pointed out, Kai, I mean, the statistics we get is actually that carbon emissions are increasing, not decreasing, which ought to be extremely alarming. But I don't see that sort of shell waves going through the system right now.
No, you're right, Mats. And I think, to add to what you're saying is also the mixed messages or mixed signals that market is getting. So you have new areas for drilling and extraction of oil and gas out of, natural reserves in the US, on the domestic US market. You have, expanding licensing of drilling oil and gas drilling in Norway. So in the same time, while we know that the reserves of fossil reserves should be stay in the ground. So you have this in the market, sort of the financial industry is thinking, okay, where exactly is this going to move now? We have energy that is security issues. It's not anymore just a climate issue. It's also security issues. So it is a mixed messages that it's also creating a lot of trouble for transition.
Isn't it remarkable that we know that if we're going to meet the targets for 2050, we need to at least 1/3 of known oil reserves should stay underground.
Yeah.
And the companies are still drilling for new oil. I mean, could anyone explain how that is okay, and why the world hasn't reacted stronger and more decisive?
And the UK government invest in new exploration of oil and gas. Yeah.
Out of the Scottish coast, yes, that's going to happen because they are looking what's happening in Norway and the US. So it's just a natural reaction. I think, going back to, I think the finance and of course the business around the world, the global, is affected physically and transitionally by climate change. But who is not affected is politicians, and I think we are still lacking the political leadership in many countries in the world, to really tackle, to provide that roadmap Mats is talking about.
And isn't that, I mean, it's so surprising or worth noting that at least in Sweden, the average time to new election is about 2 years.
Yeah.
So you want to be re-elected, and if you want to deal with ESG, you need to have the long-term perspective. But I mean, the politicians actually have on average 2 years, and I think that is reflected already in what we're seeing, unfortunately. So we need stronger and clearer leadership from politicians. Absolutely.
Let's go into the question about the money we're talking about. It's a huge number of trillions that going into this sector, what we call ESG. And not every time the money used in the right way, but it's more and more discussion about the greenwashing, and some financing sectors actors are using their investment, and are they accountable for it? Is it some sort of greenwash related to this amount of money that going into the capital market on sustainability and ESG? So the investment management firm Morningstar removed more than 1,200 funds with a combine of $1.4 trillion in assets from its European sustainable investments list, as they didn't have sufficient evidence to support the inclusion of their sustainable investment list. And US Security Exchange Commission removed Tesla for ESG claims. So is it a risk that the ESG investment don't stand scrutiny?
In the ESG industry, if we can call it an industry, has come to a crossroads where it needs to go through this purification purge. I mean, it has been sort of taken over by marketing and PR departments in many of these banks and financial institutions for a simple reason, that it's very profitable to sell ESG products because you can gain, trust, reputation. You can make more money in many of the cases because the fees are much higher and so on. Depending if you're active or passive, it doesn't matter. But I think the one of the biggest things that, and Mats took that up, is that if you look at the numbers and then you look at how the world looks like, you can ask yourself a question. So where are the results? Where are the results of all these investments? What do they actually create? So I think it's more the boomerang effect, going back to the market saying that, okay, guys, you promised, you committed, you do all of these things, but we don't see any tangible results. Our industry is leading of a very big, I think, illness, and that illness is about illness of no results. We have big difficulties to show results. And that's something that is going to clear out many of these things, I think, in the next couple of years.
Do we need to speed up and change the regulation?
Yeah, I think European.
I think that I don't think the solution to all this is more of regulation, and let me explain why. Because I think that ESG is definitely a moving target. It's changing. We know more today than we did yesterday, etc. So by having regulators telling us what is green and non-green could end up in a disaster, because if they get it wrong, it will take years before they can redo it. And I think that the best way forward is to have self-regulation, which doesn't mean no regulation. It means that you have regulation, but you can actually quicker move to adoption whenever you need to. So again, and since there is no one silver bullet except for a price on carbon, I think we should say that it's fine. Find your way to do this and let the 100 flowers bloom, and be transparent in what you do, and then you can evaluate this. But I don't believe in more regulation. I don't believe that regulators will move the flag in the right direction on this, unfortunately.
EU regulation on defining EU taxonomy, defining green assets being nuclear and gas, is putting a lot of renewable energy at disadvantage in because many of these industries, gas and nuclear, are usually subsidized heavily by national governments in order to protect their own energy security and all of these things. And renewable energy is not necessarily supported in that way. And we have seen that in Sweden in a debate that is going on various types of energy sources. So I agree. I don't think that regulation per se will increase in ability of the industry to do the right things. And I agree, you will see a lot of different approaches. And I think the future of ESG will be much more regional and much more different in a way how it's applied on the different parts of the world to actually create the transition, instead of having a one sort of a solution that fits all.
But then we are not far away from the question of reporting, scoring, and ranking. And there are claims that reporting and ranking on social and governance of ESG investments leave room for desire. How do you see this? Is it a global problem?
Oh, yes, it is. It's a global problem. And I think, we have to move from corporate conduct ratings. I call them a corporate conduct ratings, not really looking at the business model ratings and products and services. If you could look at these ratings as MSCI and all of these other providers, they are actually assessing corporate conduct in terms of, do companies have right policies addressing the right issues, do they take up right things in the reports and so on, but not really looking at what products are they producing and how are these products contributing to these transitions. So we need to move from what Matt says, from the words to action, and action is on a business model. And that's something that needs to change, because the current rating models that we have, and I'm talking about all of it because I have access to most of it, is not really assessing the sustainability on a product level. And that's because we lack the scope 3 data in many cases. But there are companies doing that. Carlsberg is one of the Danish companies that have done a lot of work on putting the scope 3 emissions in a way that you can have a product, the sort of a beer in the hand CO2 emissions. Well, how much is it actually when you buy a product? What does it mean for you? And this is where I think where we need to move.
And Mats, how is it with the transparency in the field of reporting?
I think that due to harder regulation, I mean, you make companies report in a way that doesn't always reflect the underlying reality or the threats. But I also, to echo Sasha, would say that let the world be led by leaders. I mean, like Carlsberg. I mean, if they do things right and do it in a transparent way, others can follow. And again, I don't think you should or could compete actually in the field of ESG. It's something where you come together and you share your experience and you try to find ways going forward. Then also, if I were to add anything, I would say that don't forget the G in ESG, governance. Because if we want to really address this, we need to have this backed by the owners, governance. So we need to make sure that you have a board that reflects the will of the owners. And I think there is a lack of G in a lot of places, not the least in Japan. Sasha, I don't know if you were to like to add to that.
Yeah, I am very much aware of that, working with these kind of investments in Japan now. And I think you're right, because it's more like a EGS than ESG, because the G is probably in the middle, supporting the implementation on both sides, making sure that things are happening. And that's not really the case, because the governance angle in many cases in Japan and many other places in the world and many other industries is the sort of the sore point, the point where companies having a difficulty to grip basically through the means of how they steer the companies, how they can make things happen. And it is the feeling that you can get in Japan and many other places is that it's almost like a makeup, they do they tick all the boxes. But when you start talking to company and engaging with the company and getting to understand how they do it, you realize that this is something that is really not, part of the fabric of the company. Yeah.
Sasha, you are now in Japan. as a Chief Investment Strategy Officer at SDG Impact Japan. What's your view on Japan's focus on ESG? Can we learn something from the Japanese ESG thinking?
I think we can maybe learn a couple of things, and that's that they are very curious about how to link some of the things that ESG is about to the business model, because they are very commercial in the way how they want to, deploy the knowledge from the ESG on the way how they can develop their commercial business. That's something that many Western companies probably still have a lot of work to do. On the other hand, this is a very mature market, but still underdeveloped in terms of both approaches, and it's very Japan centric. So they have their own view on corporate shared value. It's a big thing in Japan. SDGs are a very big thing in Japan. All of the UN-driven initiatives have a very big spread in Japan. But if you look at the way how disclosure looks like in Japan, there is a lot to wish, because disclosure level especially on the mid-cap segment that I'm investing in, it's something that can be much better.
And how is it with the governance, the G in ESG?
They have been improving last couple of years. The Japanese governance challenges are related to the composition of the boards, the duration of the board members, non-executive representation, and so on. They have improving. Some of the companies I have had interactions with have completely sort of shifted the governance structure in order to mirror and reflect demands from the West. However, it's a still very hard to penetrate market on the governance. If you don't have local knowledge, if you don't understand the language, if you don't have the right context, you will not even get admission to a company. So it's very much dependent on understanding the local context.
When we talk about the pension funds and ESG sector and sustainable finance sector, and global institutional pension funds assets in the 22 largest markets have reached a new record, 56 trillion. By the end of 2021. And you, as early as 2012, as a CEO of AP4 pension fund, started to invest in low carbon strategies at the first investment in green bonds. When you're looking back to the time when you implemented your strategy, what is the achievement and the lesson learned from this time, Mats?
Let's put it this way. I mean, number one reflection is that this all started because I was questioned from my mentor, who asked me, how do you deal with climate change as a financial risk, as a long-term investor? Finally made me understand, yes, as a long-term investor, you need to have a view on this. So I decided to see what others are doing. You don't need to invent the wheel again. So I traveled for 1 year, and I met 10 of the 20 largest pension funds. And I asked them about risk, and they came back to me and said it was all related to volatility, which to me is rubbish. And then I asked them, what's your exposure to climate change? And none of them, in 2011, none of them had any idea that it was a risk that they should have on the radar. And of course, no one had done anything about it. That's why we sort of invented the low carbon indices. So looking back, this is 10 years ago. Things have definitely changed. You wish it could have changed even faster, but still there is a huge change. And if you don't know about the risk, if you don't realize the risk, you will never mitigate it. So I think you'll come to a point where everybody realizes that it is a risk. But now the question is, how do we mitigate it? And again, I'm of the view that let the 100 flowers bloom. Do it whatever way you want, be transparent. If I would have done it this journey again, I would say that I wish I had been more bold than I was. But again, I had to fight for this. I wouldn't say against, but it was a tough one to convince my board members that this was the right strategy and we should as a long-term investor. Once we realized afterwards that we actually lowered the risk in the portfolio and we actually got excess return, then everybody was happy. And I think this is extremely crucial to understand that ESG is not about looking good. It's not about charity. It's all about economic decisions. And once you get those parameters in the right place, money will actually start going in the right direction. So, and then you realize also from this journey that the challenge when you are evaluated on a 2 or 3 year basis, then ESG is a random factor. If you have a horizon of 10 years, it definitely becomes a very important topic or issue to deal with in every respect. So those are a few of my thoughts from the journey.
Do you see that the pension funds today have learned a lesson and looking into what you did?
I think definitely yes. I think we might have a bit of a hiccup now when we have the war in Ukraine. We have energy prices going through the roof. So I think everybody is a bit upside down and don't know really where to go. And you have a tendency more than ever to look at the short term rather than the long term. But I think at the end of the day, if the risk of CO2 is wrongly priced, which I strongly believe, there will be money made if you can address that in a proper way. Not on a yearly basis, not even on 2 year or 3 year, but on a 10-year basis, absolutely. And that's where you should have your focus. But to make that happen, you need to have owners, you need to have boards that are willing to take this stance, which is not a given in my view.
Let's go a little bit more deep into the financial institutions and talk about leadership. Are there enough with incentives in place for a change maker in the financial institution to show leadership today?
Well, what a question, Kai. It's that's a very tough question, but my conclusion, my answer to that question is that this is my experience. I've been in the financial industry for a long time. Mats has been there probably longer, but it's in many cases very lazy industry. And leadership, leadership means that you need to fight for something, not against something, but fight for something. And I think when ESG is becoming so nice to have and good to have on your CV and good to have in a LinkedIn profile and all of these things, it's becoming a career path. People don't necessarily want to fight for something, they just want to go along. So we need more sort of disruptors, more leaders that sort of a step forward and do things that are a bit different outside the box. And you can't have that in organizations that have a cultures that, you cannot, have a different view, or you cannot challenge the more senior management on how things are done, or, what priorities are.
Well, if I were to add anything to that, I would say that one thing that might be missing a bit to make things change is that I often speak to CEOs and, of pension funds, etc., and I ask them, do you have a mandate to invest yourself? That's really the case. So even though you might have a CEO or a board that has a view on this, as long as you don't have a mandate, nothing will happen. And that, I think, was one of the forgot to mention at AP4, when the board gave me and my CIO, Magnus, the mandate to actually invest, we took the decision to have a view on ESG as a position on us, not on the head of equity or fixed income, whatever it is. And that kicked us out. And then we couldn't point fingers at anyone. So we need to do something, and we did. And I think that I wish that every head of asset managers or owners actually had their own mandate, so they could actually show what they believe. Because today it's a lot of words. They can say we believe in this, but nothing's happening because you don't have the tool or the toolbox to make it happen.
Is it any good network that you will say something interesting to follow, to be a leader in this change-making role?
I think that going back again the 10 years, I mean, there were no real alliances, organizations of pension funds, or at least there were no CEOs, no CIOs. You usually had one person being responsible for communication and sustainability. You had to report every year, nobody really cared. So that has definitely changed, and I think that it is important to actually have a stronger view and guidelines on this.
Thanks, Mats. No, you're right about that. I think from my angle, how to follow and get the inspiration or follow the leadership. I'm looking, because I'm investing, so I'm making these investment decisions for the stuff that we're doing in Japan, and looking at the companies. I get a lot of inspirations looking in the corporate sector to see what they are actually trying to do in different sectors, how they are mixing up artificial intelligence with other solutions, trying really to find a way to do that. In the financial industry, I have to say, there are some initiatives, there are some networks and so on, but all of that for me still is not really leading to any tangible change. I want to see change on the ground in Bangladesh, in Pakistan, in DRC, all of the other places that are getting affected by this. And that's not what what I see, and that's also probably the reason why I don't see that kind of inspiration in these kind of networks. Yeah.
If there were no alliances 10 years ago, today we might have too many alliances, and those alliances being so huge in terms of, so it's more or less only paperwork, because if you should try to have a alliance or coalition, whatever it is, I think the number should not be more than 10 to actually make things happen, and you should get people from different corners of the world. And since I'm now living in South Africa, I know that the South actually needs support. I have a dream that one day you can actually find 100 alliances with 5 or 10 pension funds or long-term investors in each of them, and you can start sharing the real stuff and the real work you have to do.
Sasja said earlier that he looking into the corporate sector and their experience of how they have been driving change and their networking models. And I remember how an early adapter of climate strategy was Interface, the biggest carpet producer in the world. They already in 1990 developed a mission to go to net zero emissions, and we can see how they have sort of succeed in their work, and also how they use different tools of incentives to also inspire the employees in the company to drive change, with the bonus for sustainability. And maybe that's something also for the financing sector to look at in the corporate sector, that you have model for change. And it could be also interesting for the young generation as assets manager. What should they look at? And if they have high ambitions, do we need another incentive structure in the financial sector?
We maybe, yeah, you're right about that. But I think what we need is we need to change educational models as well. Because the way how we educate economists and financial analysts today belongs to 1980s. It's still not, in line with where we are today. And you can imagine now that we are examining, millions of economists and financial people around the world who are going to continue maintaining the system the way it has been maintained for the last 35, 50 years. I mean, that needs to change. We need to get, I have these experiences, I still have them, hiring financial analysts out of the school, you have internships, and then you have programs. And then you ask them, can you give me your opinion about this environmental report? And he looks, or she looks back at you saying that, I didn't learn in school how to do that. I don't know. I don't understand why this is important. So, we are focusing, and I understand we do that on the emissions, yes. But if you go all the value chain back, we also need to start looking at the way how we can educate people that will support this transition.
So what is your advice to the young generation of asset manager in the financial sector?
Be bold.
That's
Be bold.
Yeah.
Yeah. Don't be afraid. Don't be afraid.
No. And realize that running a business is not running something for a week or a year or a couple of years. You should have the long-term view on the things you're doing. And if you have the long-term views, I think that you will get most of the sort of factors that you need to deal with in the right perspective, and hopefully better dealt with.
And you know, it's one more thing to add. This is not a walk in a park. It's not. I mean, look, you when you work with this, you're taking on some of the big things. I mean, big challenges. So people need to be also prepared that it's not just a career. It actually takes time, as Matt says. It's a long-term thing. It's not next year 2. It's a long term.
I've been down to the Stockholm School of Economics a couple of times and shared with the students my view on ESG, etc. And it's pretty obvious that as Sasha pointed out, that if you look at the stuff they're reading and are educated on, ESG has not been part of it so far. But I'm trying to tell them that if you meet the CEO of Volvo, Scania, whatever, they will all tell you, if you don't understand ESG, I mean, don't come here. So there is a gap, in my view, between where management in public companies are or businesses and where education is. And that gap needs to be closed, and the sooner the better.
Sustainability strategy is not always straightforward, but it seems to be a need of both speed and scale up with involvement of shareholders and stakeholders, supply chain strategy, smart incentives with regulation, procurement action, and an overall system thinking in the sustainable finance strategy to come. So I hope the listener today have get a little bit of an insight and inspiration. So I will say thank you both to Mats and Sasha for today, but keep the dialogue on. Thank you very much.
Thanks for inviting us. Thank you.
Thanks, guys.
I'm Kai Embren. Follow me on Twitter and LinkedIn, where I will be announcing the future guests to this podcast. And you can expect about 2 programs a month. And each guest has a unique story of making business and society sustainable. So find out more. Visit my homepage, kaiembren.org. Thank you for listening.